Today's video is sponsored by Figure, the largest non-bank home equity loan lender in the US, with over $15 billion unlocked on their lending platform. They're now in the crypto-backed loan space and offering industry-low interest rates when you use your Bitcoin as collateral to get cash. Access interest rates starting at 9.9%, the lowest fixed rate in the industry at 50% LTVs. Whether you're funding a major purchase like a down payment on a home, investing in new opportunities, or even buying more Bitcoin, Figure makes it straightforward and transparent. Visit figure.com/Real Vision or click on my link below to take out a Bitcoin-backed loan with Figure today. Hi, I want to talk to you today about my friends at Bitwise and why they're the best crypto asset manager out there. I've talked on the show often about how crypto is reshaping everything from finance, portfolios, and even macro. Everything's ramping up. We've got tailwinds in DC, interest from TradFi, and growing optimism. But smart investors see all of this and focus on the how. What's the savviest way to seize this moment? And that's why so many investors I know are working with Bitwise today. They've been all in on crypto since 2017. They're OGs. They've got more than 30 products to help investors like you get access to whatever they need or want. They've got a team of more than 100 across the US and Europe, and they have over 10 billion in client assets. You know, a lot of people know Bitwise for their ETFs, how they manage the world's largest crypto index funds and the wide range of crypto ETFs they have. But not as many people realize, Bitwise manages private alpha strategies too, and has SMAs for large investors, and is one of the largest institutional Ethereum staking providers. They really do everything. These guys are true OGs in the space, and they're good friends of mine too. So please go and check out Bitwise. They're really excellent. Go to bitwiseinvestments.com and see all that they've got to offer. That's bitwiseinvestments.com, or just email them at james@bitwiseinvestments.com and let them know that Raoul sent you. Anyway, there's a million ways to access crypto. Explore how you can access it best with Bitwise. And remember, carefully consider the extreme risk associated with crypto before investing. Anyway, thanks so much.
Hey, Real Vision viewers. A quick pause to introduce you to today's sponsor, Axelar. Axelar is building the rails for the next wave of global finance. Not just crypto, but the future of how assets move, how markets connect, and how institutions plug into open systems. Think of it this way. Bitcoin brought digital gold, Ethereum brought smart contracts, but Axelar is bringing connectivity, the secure link between your favorite blockchain and traditional financial institutions, rushing to plug in. It's why top-tier firms like Dragonfly, Polychain, Coinbase Ventures, and Binance Labs are backing Axelar, and why global giants like Deutsche Bank, MasterCard, Apollo Global, and JP Morgan are already building on it. If you believe the future of finance is open, programmable, and interoperable, Axelar is the gateway. Want to digest deeper? Visit realvision.com/Axelar or follow on X at Axelar. That's AXELAR, the gateway to open finance. Today's video is sponsored by VeChain, the leading layer 1 built for real-world adoption. VeChain launched all the way back in 2015. Built for real-world utility before most people had even heard of blockchain. One of the oldest protocols and boasting 100% uptime since launch, it's known for powering real-world solutions and partnerships with global brands like the UFC. Now, they're entering a new, user-focused chapter powered by adoption in the VBetter ecosystem and an ambitious technical roadmap dubbed the VeChain Renaissance. Renaissance builds on VeChain's history of real utility and adoption to deliver a faster, more flexible core protocol, designed to meet the needs of builders and drive mass adoption. The next phase kicks off on July 1st with the launch of Stargate, VeChain's new staking program. It's an evolution that brings VeChain closer to delivering its vision of a world powered by Web3 without compromising on reliability or stability. The future is here, and it's scalable, sustainable, and evolving with purpose. Check the links in the description to find out all you need to know about VeChain Renaissance and the updated staking opportunities available through Stargate.
Hi, I'm Raoul Pal, and welcome to my show, The Journeyman, where we travel to that nexus of understanding between macro, crypto, and the exponential age of technology. Now, we have lots of guests, and some of them are experts in technology, others in crypto, and others in macro. And obviously, I bring my own views too. There's one person that is one of my favorites who comes on from time to just chat with me and we catch up. That's Jordi Visser. Jordi, like me, grew up in the macro world. He was also a hedge fund manager, but he's also a macro thinker that many people love to talk to. And interestingly, unlike most macro thinkers, he himself, like me, has found that junction between crypto, exponential age technologies, and macro, and weaves that path between them all. I think it's the most interesting part of everything that we do, and I always love to sit down with Jordi. So I think you're going to get a lot out of this. So let's chat with Jordi Visser. Join me, Raoul, as I go on a journey of discovery through the macro, crypto, and exponential age landscapes. In the journey, man, I talk to the smartest people in the world so we can all become smarter together. Jordi, how the devil are you?
Fantastic. How you doing, bud?
Yeah, good. Always good to see you. And as we were just saying off camera, no idea what we're going to talk about, because for us, we do this periodically, and it's just to catch up on who's thinking about what's important, what's on our minds. So this is always fun. I look forward to this.
Same here. It is always interesting times, but it seems to be more interesting every 4 months or so when we get back together.
Exactly. So what's on your mind right now?
Obviously, most of it is around artificial intelligence, but let's see. The last time we spoke was probably January, February. I have been incredibly surprised at how people keep falling for the Charlie Brown pulling the football away with things outside of artificial intelligence. They've been focused on geopolitics through the lens of war, through tariffs, and DeepSeek moment, and all types of things that, to me, highlight that people are very skeptical about and confused about what artificial intelligence is going to mean for the world. But in particular, since you and I are both born out of the macro world, I have found it very, very challenging for people to accept that you can have a world that still has a lot of people driven by what's happening in the old industrial economy, and the digital economy is accelerating so fast that people are having a hard time thinking about one that's slowing and almost going in reverse, and another one that's going at full speed. So it's very hard for people to have a framework. That's what's on my mind almost every single day.
Ever wish you could access cash without selling your Bitcoin? Ledn makes that possible. Ledn is the global leader in Bitcoin-backed lending. Since 2018, they've issued over $9 billion in loans, and not a single Satoshi of client funds has ever been lost. Here's what makes a Ledn loan different. With a custodied loan, collateral is not lent out to generate interest. There are no credit checks. Funds in less than 12 hours, no monthly payments, and repay whenever you want with zero penalties. And they just don't talk security, they prove it. Ledn offers proof of reserve reports, verified by a top accounting firm every 6 months. Ledn is 100% focused on doing one thing better than anyone else, giving Bitcoin holders a secure and transparent way to unlock liquidity without selling. Learn more at www.ledn.io. Yeah, I just find that everybody is mid-curving it as well. People don't realize the profoundness of what is happening. And it just goes to immediately, well, is it going to take our jobs? And they kind of leave it at that. And then there's a bunch of people saying, well, AI is not really that smart. And people leave it at that without realizing truly what a world is with infinite intelligence.
I think, again, you and I bonded over this part. There's times where I hear you talk about it in some way that I haven't thought about, and it'll just be something I've seen you post on X. And the reality is, unless you immerse yourself in it via using it and or just getting constant information from people that are talking about it in the know, I think it's very hard. I will say that, like, if I try to think about Real Vision and what you gain from this, you gain a lot of knowledge by talking to a lot of people that are focused and have their hands dirty with this. And I think for people that are trying to learn it from the stands and looking from like the upper deck at what's happening down on the playing field, I just don't think you can comprehend it without picking up a bat or picking up a ball and playing with it, and at the same time talking to the people that have been in it for a long time.
But Geordie, most people aren't tinkerers by nature, so they see something like this, they're like, I don't know where to start, I don't know what to do. My advice to everybody is talk to the fucking thing. Just talk to it. And just talk to about anything. And then the more memory it has, which is another huge breakthrough that people don't understand, that it now knows me so well on anything from restaurant menus to travel tips to macro views. And just talk to it like you would do to a human. And that's the game changer, I think, for a lot of people. If not, they're worried about prompting and what do I get out of it? So get over all of that. Just talk to it like it's a mentor.
I just wrote a Substack post on that, and it was more here's where I've seen maybe I've had some progress made, and I'm writing another Substack right now actually on this, or a topic of it, which is I wrote one that specifically said what you said, which is just start to speak with it. In the last month, it sounds like a human. And for the prior 6 months, it didn't sound like a human. It was smart, but it didn't sound like a human. And I think the important part is I noticed it the first time, and I'm sure you did too. All of a sudden, you have the AI doing and delays, and it sounds like a human. It sounds like
and you can
thinking.
Interrupt, like we would do in a conversation like this.
Yeah, and maybe you are just an avatar right now, and I don't know. But the beauty is the responses that are coming, and what you just said about voice mode, that's what I said. And the angle that has worked for me to get people to actually do it is if they care about their kids and the future of their kids' ability to work, it's not going to get rid of jobs. But if you don't integrate and build a relationship with artificial intelligence, it's going to be very hard for you to have a job. So
I don't know if we talked about this last time, but I've had a realization that for us to be immortal, we're going to live in this digital super intelligence, the ASI, when it comes. And that therefore, even though we don't like the sharing of stuff due to privacy, you won't exist without it in the future. Your immortal self will live in this. And I'm going to see there's going to be a period of time where we're all going to dump every photograph we've ever taken into AI. So it knows us. It will recreate us. Because just because we don't have holograms now, well, we do. I mean, ABBA are on tour with holograms in the UK and have been for 2 years to packed out theatres. We'll have a hologram of Geordie in 100 years' time. And your kids will know you almost as well as they would do if you're alive.
This is the part that I think scares people, and this is the part where they, I don't want to say lose interest, but they kind of give up going through it because it scares people. I mean, the change you're talking about is a dramatic one. And I listened to an interview with Peter Thiel that someone sent to me from 2 days ago with Ross.
I've not watched it yet. I want to watch it.
I was disappointed in the interview, but the reason was because he's very focused on the world not changing and that this is stagnation. And he talked a lot about how the physical world has not really seen exponential innovation and change, and that if it wasn't for the computers advancing, we wouldn't have much going on. And I think the more that I hear even people like Peter Thiel say that, I think we're getting into a world where people are having a hard time thinking about what it's going to look like. I agree with you in the fact that it's not just the speaking part. And I'll give another example that happened this weekend. So I have a garbage disposal in my kitchen, and it was getting difficult to get a plumber because we've got a shortage in Maine. So I finally decided that I was going to fix it myself. Now, in the old days, I would bring up a YouTube video. I'd watch it for 20 minutes and then go under there and go do it. In the new world, I took a photograph of it and in ChatGPT. It told me the model that it was. It told me what I was supposed to do. I took a photo of the place where it told me to put an Allen wrench, and then it told me exactly what to do and how to do it. The whole process took me 3 minutes and it was done. And I was going to call a plumber. So that, I don't think people realize the multimodal part of this.
I had an electrician come to fix something in my kitchen. It's a cylinder that heats water up to 100 degrees, so it comes out for tea, making tea and stuff like that. He didn't know how to fix it. And he was saying, I think it's to do with this. And I said, let me just check with ChatGPT. He's like, what are you doing? I took a photo and said, what do you think's wrong with this? And asked it verbally, and it responded. And he's like, holy shit, let me just try that. Worked. He's like, I'm like, why are you not doing this all the time? Because I'm scared to.
Yeah. This is so in the hedge fund world, where I'm spending most of my time on this, is I've said publicly that I don't know if you still have Bloomberg or not, but
yeah,
Perplexity. Okay, so I do as well. Perplexity has replaced 60% of my Bloomberg usage, and I remember there was a post about it, and then people started saying, well, it can't do X, it can't do Y, it can't do Z. And I said, well, Bloomberg can't do X, can't do Y, can't do Z. And guess what? I can figure out information much faster in Perplexity than I can in Bloomberg, particularly when it comes to taking a news item like Oracle's earnings or Broadcom's earnings and then extrapolating it into other companies and connecting to what they said and seeing if other CEOs said the exact same thing. And that's the part what you're saying with anything, which I do too. If it's visual, I'm taking photographs of it until you do it the first time, whether it's a flower, a bug, anything. And you're like, what is this? You're just not using it, and you're not realizing that it can answer all your questions for you. If you're not using it instead of a book, if you're not using it sometimes instead of listening to a podcast, but you go in and have it do this transcript, I just don't see how you're able to envision the world that you described. And that's why with Peter Thiel, he kind of put a murky, darky place on things. And I just said, I think people that look too far ahead, because we don't know what the future is going to look like. We just know that AI is going to be a major part of it.
Now, one of the questions I want to ask you, when you're using Perplexity, do you find it better than a general, because they got the Perplexity, which is kind of tuned towards finance. Do you find that better than the general model like ChatGPT? Because I'm not sure if it is. And there's some papers suggesting that the more you tune the model for a certain purpose, it's not often as good as, and they've even figured on private data sets, often not as good as the generalized models. I don't know. What do you think?
So I build projects in ChatGPT, which I use specifically for that. So if I'm taking a chart, so I've created my own, if you haven't used the projects,
yeah, I use projects.
Built in. Okay, so I've created a bunch for the finance industry related to, like I put together a technical analysis algorithm. So I've always believed that as an Elliott Wave person, that Elliott Wave by itself is enough for me from pattern recognition. But if I want to connect some other exhaustion signals to it to make it more robust on exhaustion to try and catch turns, if I want to have momentum components to identify when it's truly impulsive, I created an algorithm and in projects, and that is sitting in there. And all I have to do is take a snapshot of any chart that I see in Bloomberg, and I paste it in there, and it does, and it gives me a score on it between 1 and 100. So I have found that for certain things like that in ChatGPT, the projects thing works better than Perplexity. What Perplexity for me has done far better, and this actually started at your conference in Miami, believe it or not. It was the first time I did this. When an earnings report comes out, I find their transcript work is far better than any of them. The transcript thing is the key component for me. That is where all the ideas are coming from, because right now, I think you can lose your mind trying to trade rates and being stuck in a range for 2 years while AI is going up. Commodities have pretty much been the same thing. It's just all these false starts. The true alpha that's been generated has been driven by artificial intelligence over the last few years. And so if I want to go find out how Broadcom's earnings relate to Cisco, by the time I've gone through the transcript and I've connected it, there's no comparison on ChatGPT, at least not. And this might be an answer. They could probably catch up very quickly, but right now Perplexity just has a stranglehold for me.
Yeah, I mean, I've used it for quite complicated macro thinking. And the big change for me is it now basically uses what we've always used, which is a probabilistic framework for long-term or longer-term forecasting for markets or whatever. And it couldn't do that before. And now it's really be able to join the dots, which is as macro people, that's all we do, is we happen to join dots and keep this big picture in our head, mental picture, and try and fit it all together. It's getting a lot better at that now. I mean, better than 90% of most macro people now.
Yeah, and the reason, and you hit on it, I mean, a year ago, the search component was not really a part of it. So without having really good access to information over the last 6 months, having the history back a long time and the training model was not useful for someone in the markets. But now having the ability of looking at what's been coming out recently, connect it, I use deep research constantly to create reports for me of ideas that I want. And I remember I was at a hedge fund. You'll appreciate this. So I went to go do a demo. They had a firewall up. Their employees could not use any of the LLMs. They had an aggregator software, which gave them access to some of the older models all within there, but they didn't have access to the tools, the projects, all the things that enable you to do things with it that, make your life better. But the reason this was important is because as I was sitting there and I was doing a demo for them and I showed how much, one of them said, oh, I wanted to go through the SLR change and I wanted to see what the bank CEOs had said and if there was any commentary. First of all, you couldn't have done that 6 months ago. But when they did it, they got nothing. I showed them the prompt that I used, how I used the deep research side, the reasoning model as opposed to just the general. And they weren't even using 4.0, it was 3.5. And by the time it was done, I asked for a 2-page report. It had everything that the person wanted. And that's where we are with this, is that if you don't play with it, if you don't use it, if you haven't created your own prompt templates, there's just no way to get the full grasp of it. And I think human beings like the concept of having a software tool. And this is not a software tool. This literally is your assistant. You have to learn to speak to it to get the answers. You have to learn to give it more details. And then once you get an answer, you have to continue with the next question. It doesn't give you the answer you want. You have to keep going and going and going. And that's the beauty of it.
But we're not far away from it knowing you, because of your projects and all of the questions, that it will just prompt you and say, Geordie, this is interesting for you because I know how you're looking at this. This falls within that category. This might be an interesting opportunity. That's not far away.
And to some degree, and you know this too, it's already there at a minute level. When I write, I have a particular style. I personalize things. I bring in my own experiences into it. So it's already at the point now where I don't have to upload all of my papers and say, hey, here's the style of writing that I am, just see if you can go through it. Now I just write something and I say, yeah, change it a little bit, make it in my tone. And then it comes out in my tone. And then I go through the editing process, but it already knows who I am. And if I asked it, which I did recently, because someone requested my consulting services and said, hey, will you, do you think you could work for the college for a brief period of time and help us kind of adapt to how we need to integrate AI into the curriculum? And I went in and said, okay, who would be a good person for this? And it put me up. So again, it's starting to know who I am, what I do, and everything else.
Have you done that? Have you given it your writing? Because I've not done that, and I've got a graduate student who's at London School of Economics, and he's working at 0.72 for his summer job. And after that, I said, can you just dump all of 20 years of GMI into a model for me? Have you done that? I mean, because all of this is behind the paywall. I mean, there's plenty of my writing that isn't, but most of it's behind the paywall.
So I did that on Claude very, very early, meaning I want to say that was late 23, maybe September of 23. I didn't like the way it did things. Like it wasn't truly in my tone. Now it just has all my writings because everything that I write, I use ChatGPT as an editor. I use it as a brainstorming tool. I showed a college graduate how I used it to write a paper while they sat next to me. So I said, so I come up with an idea. Now watch how it happens. And so I spoke to it and I said, for the first paragraph, let's do this. For the second paragraph, let's do this. For the third paragraph, let's do this. And then I started conversing. I want it to be another 3 paragraphs. Give me some ideas on how I could continue from here and expand it based on things that I've talked about over the last month. And that's where this stuff goes, is that every idea that I come up with, everything I put into ChatGPT. So ChatGPT is the model that I use for brainstorming. It's the model I use for building things. Perplexity's for finance. Gemini is actually a backup check at this point. I'm about to integrate it and do some stuff with Gmail. And then I use Notebook in a similar way that you said, but you certainly can do that without a problem. You can have it trained on whatever you want. I call them knowledge brains, and they're phenomenal to have, but I did that a long time ago. Now everything I write starts in there, so it has access to all my information.
What economically do you think this means? I mean, we this is an ever-evolving conversation, but how fast do you think this matters on an economic level, and in what way is it going to matter?
I think we're at the worst part of it. So I'm believing now, based on all the data that has come through, that I think the worst part of this is where the job situation starts to become a reality, not in a recession level. So this is a thought I've had that I haven't seen written. People usually go into two camps. You have the techno optimists that say, well, there's always new jobs created out of any innovation. And then you have the bearish side, which is we're going to have, 10 to 20% unemployment. I actually think we're going through what is happening, and I think New York City's mayor elections are representative of the reality of what's happening, which is anyone can get a job. There are labor shortages everywhere. Now, you may have to take less pay. You may have to do a job you don't want to do. But that's a weird scenario that the economy's fine, it's growing, but people are losing jobs that are in middle management. They're losing jobs at entry levels. Graduates are having trouble. The one thing that Peter Thiel has said, which I agree with, but I think everyone that's a student of history realizes, if you're 25 to 35-year-old people, that demographic is having a hard time affording a house, if they're having a hard time getting a job, if they're having a hard time envisioning how that job turns into a growth plan, that they're not going to at some point be disrupted. It's more of a psychological labor kind of problem. And I think that's what's starting to happen at a very fast pace. Now, the good side is for people like you and me who are entrepreneurs, who are not scared of anything, and we just move to the left and go, oh, AI is great. I can build a business. I can build an app. I can do what I want. I think there's not a lot of people. That's not everyone. And so when Peter Thiel talks about a hollowing out of the middle class, it is happening. And so I think we're in that stage, the worst stage, where the companies, the shareholder side of the United States in particular, realizes that they can get more profit margins by not hiring people and reducing headcount as they integrate AI agents and everything going on. I think 5 years from now, everything will look much better. But I think we're in that part where it's moving too fast and companies are going to do it. So I think the economy is going to grow, but I think the labor market's going to be soft, and it's going to bring a lot of problems into the cities.
My view on that is, I think that this current part, as you're talking about, the loss of jobs equates to the decline in the workforce anyway, because of the aging population.
Mm-hmm.
So the workforce shrinks, and that gets accommodated by the AI as a new workforce. And so the job market feels weird, as you kind of suggest. People can't get jobs as graduates. There's people losing jobs that wouldn't. So there's a bit of moving around, but it ends up being more sluggish. But generally, I think it's offset by the shrinking of the labour force participation rate. That's a natural function of the aging population. But soon after that becomes a real problem. Then there's a chance that the labour force participation rate collapses because of AI.
Yeah, see, I'm a little more negative than you. Obviously, we're both on the same page. I mean, right now there's a shrinking of the labor force by about 300,000 people a year in the U.S. naturally. We've shut the borders, so immigration won't be there to fill in, and ICE is going through and scaring people. So, let's assume maybe 600,000 people a year is the shortage. So far this year, in the 5 months of data that we now have, outside of January, and the reason I say outside of January, just pick the month where we started to see no more jobs in government. So government jobs are zero. X healthcare and X leisure and travel, which to me are government subsidized through Medicare, Medicaid, Social Security, and baby boomers, you have 33,000 jobs a month so far. That's where we are right now on average for this. You know you're going to get revisions, which are going to be downward, which will be more than that. So X healthcare and X travel and leisure, you're already
Those are
talking
all baby boomer things, right? They're all
exactly
demographics.
And the government subsidizes them through Medicare, Medicaid. I mean, those revenues are going to grow. So this is where if you want a job and you're not going to school to be a nurse, think about how many people go to school to be in technology, to be in finance, to be in all these things. I just think it's going to get harder. And one thing people have not yet put into context, I do think the bankruptcies are going to start to accelerate too because of AI. I think AI accelerates that. And that's one of the reasons why I believe we're entering a period, and this is obvious based on the last really month, but last week, rates are going lower in the US. Regardless of what happens, you're going to start to see pressure to move rates lower. I think it should happen. I think it's going to happen. But I think that is one of the offsets, is that the people we're talking about that are disrupted, the house affordability, you're going to need rates to go lower. And I think they're going to move them lower.
Yeah, I do too. I don't see a world in which they can't. And it's now an open admission that the debt financing is the entire focus of the government, and it's everybody's thing. It's all it is now, is that whole everything code thing that I talked about a long time ago is now openly discussed. I mean, even Trump saying, "Oh, just fuck it. We'll just sell more bills until we can get rates down and then we can try and roll it out." I mean, this is the government, US government, basically saying we're just in a debt refi cycle.
Yeah. And again, if you go through the stages of this year, okay, we don't care about the stock market anymore. Main Street's been hurt. Okay, well, that worked for a while until you realize that's not going to work. Okay, we're going to put massive tariffs on the world. Okay, that's not going to work. So you try to find some middle ground. And the reason I say things don't work, especially in the tariff situation, you start, just like with Lehman Brothers, you start realizing the world is interconnected. And if you shut off and you attack China, then China says, well, good, we have rare earth. That means you're going to be at a military disadvantage. You're going to be at a technology disadvantage. You're not going to be in a position. You guys made this decision. So the only alternative to me is to continue the debasement and try to force nominal GDP above rates and make a bet that inflation is not going to pick up. You and I, have talked a lot. I think we differed to some degree on inflation for this year. You've been right so far, and now I've kind of jumped back into the part about how I think when the middle person in the country is having a hard time, and that's the way I view it, inflation is based, in my opinion, on the middle person. If demand isn't good enough, then you've just got a problem. And I think we're seeing that not just in the US. German inflation's come out. It's back down to where it was in 2019. Like everything around the world seems to be more of a deflationary situation. And I don't think this is from AI yet. I just think this is from the distribution of wealth problem and the fact that the money's run off, and the only people that have money are the ones benefiting from asset prices. So it gets me back to when I visited your conference, the first crypto conference I went to and participated at. I got to meet a lot of people that are in that middle demographic and that went to school. They have the debt. They just can't grow their way out of it, and they view a life of boredom. And they're looking for more excitement. And that's why I continue to focus my attention, not only on AI, but the eventuality of crypto and Bitcoin, which is starting to accelerate. So
the other side, I think you and I have probably talked about this in the past as well, is given that cohort of, let's say, 25-year-olds to 40-year-olds now, that older Gen Z and core millennial cohort who are in this trap, they're deep in the middle of this trap. Not only is crypto offering them an opportunity, but we're seeing the rise of the speculative economy. And we're seeing it in prediction markets. We're seeing it, the rise of Robinhood. Robinhood's growth is extraordinary, what's going on, as people are realizing that speculation is somewhat warranted because they have no other way around it. But it also leads me into, well, the good thing that speculation is doing is testing all these things in crypto, these new ideas. They get tested like memes, which is like capital formation, instant capital formation. and also humans, if we're not in a job, we'll probably still speculate because it's fun. I don't know. There's a big rise of this speculative economy. I think is a big mega trend that people don't really see. They're too cynical.
All you have to do is go to the Fred database and look at the chart of gambling as personal consumption expenditures of gambling, which is now over $200 billion a year in the U.S. And it's a perfectly linear incline. And then you go and look at how much money is spent on new cars in the U.S., and that is on a decline. And the numbers right now for new cars, personal consumption expenditures, are below $250 billion. And I'm sure after the tariffs, they'll be even lower, which means gambling is just taking over as a major, major part of the economy, which I think everyone knew because they can see it on TV. They realize there's, fan duels everywhere. But I don't think people have gotten to the point of why. And I do think it is a very major thing for younger people because of the boredom. It's a form of education. They view experiences completely different than we did. And at least they have a chance of getting money, where if they spend money on an expensive dinner, it's just lost. And so I do think crypto falls into that. I do think needing real-time information, real-time pricing, doing things when you want, it all fits in with a faster world and settlements of money, everything. So I do think it's a representation that the world is getting faster and that matches AI. But I also think it gets into the boredom and the anger that people are having towards not being able to enjoy their lives the way they would want.
And when you look at the crypto landscape in terms of the adoption now of what we're seeing, all of these corporate treasuries, what does it mean to you?
So I think this year and really the last, I want to say 18 months, has been about accepting a gradual acceptance of Bitcoin as something which will be here 5 to 10 years from now. So I think
remember when we first met, you were still struggling to explain to traditional hedge fund people and finance people that this was meaningful, and they thought Geordie was a nutcase. And now suddenly everything's changed, right?
Everything
you are
changing.
A nutcase, but that's separate.
Yeah, that's completely separate. Bitcoin's being accepted more and more every day. What is not being accepted at this point, and actually this is a good place for us to talk a little bit about it, because I've said this on my YouTube videos. This feels a lot in the altcoin world like the post.com bubble to me. It feels like there's a lot of people that got involved. So think of the internet from 95 to say 2000. A lot of people joined into it. They left banks. They got involved and they were hoping to make tons of money. It was a free thing. Everyone got involved. And then you had this big fall. And it took a while to come. It took a while for the NASDAQ to get out of the problem. And one of the reasons it took a while to get out, just like it was in Japan with all of the banks owning shares of, everything about this overhang of people that had gone into something. Every time anything goes higher, there seems to be a wall of supply that stops it from the crypto community. Now we've got circle enthusiasm. So we've got people focus a little bit. You got Coinbase back up to the highs. So I'd say the traditional finance world is getting a little bit more excited. Now you've connected, in the last week, you've connected, CoreWeave and Core Scientific. So now we're getting some of the Bitcoin miners back involved. All of a sudden, the traditional finance world is starting to see things. I have said publicly, and I will continue to see it, until Ethereum breaks out. Because of the network effects on stablecoins, which I think is there, until Ethereum breaks out, just another OG of one of this, and people start getting on board, I don't think we're going to have the kickoff to what I believe will be the end of the dot-com bubble overhang. And I think that's what we have in crypto from the 21-22 period. A lot of overhang. It seems like there's a lot of supply. And once we work through it, I still believe there's going to be a short squeeze in the entire space this year.
Yeah, I think you're right. And the ETH breaking new highs is probably also Solana breaking new all-time highs because it hasn't broken where it was. And that is a mass wealth generation event. There's a lot of people involved in this. There's a lot of fortunes to be made, and that creates a whole new cycle of reinvestment and opportunity risk-taking and stuff like that. Yeah, I totally agree. And it feels like it's coming. When that is, most of my work suggests that, this year should continue and maybe even the first 2 quarters of next year continues. Here's a question I want to ask you. One of the things that we have done the work on is that and this won't surprise you, the main driver of alt season, as you call it for the smaller stocks, is actually the business cycle. And the business cycle is the same driver as small caps versus big caps. It's EM versus that. It's junk versus, it's always the same trade, because once the business cycle picks up, people have earnings, they go further out the risk curve, it gets reinvested. Why has the ISM remained so low? I mean, you and I have looked at this forever, for our whole careers. This is the longest period below or at 50 in the history of the ISM. What is all this about?
So I remember Julian and I sat next to each other at dinner before the event, and you've heard me say this. In fact, I remember when I saw
I know there's no business cycles. I get that.
Correct. So here's the part that I'll say, though. It is the problem that in a world where artificial intelligence is coming, there should never be a time that the ism takes off. It just shouldn't happen, in my opinion. Now, I'm going to change that a little bit, because I do think we're getting closer and closer to something which is related to the business cycle of AI. Because at the end of the day, if I equate all cycles to power, meaning you have to be building something, and oil has always been, it's that macro piece that offsets and is out of control of monetary policy and fiscal policy. You need power. That is the thing that needs to fuel it. And AI consumes an enormous amount of power. And we are going to start to see, well, it's ironic I say this to someone in Spain, but we're going to start to see important blackouts. And there's going to be more of them in the US. And I think they're coming very, very soon, because I don't think people have looked at the exponential move. And this fits into the alt season side to me. So I believe we are going to see a change in the business cycle. I just don't think they exist in the push button way that they did, where you do something in the economy and it goes. But I do think it's coming this year because of what's going to be needed for the infrastructure build out on data centers, on power. These are massive numbers, nuclear. This is going to be a change. I just think it's going to be financed by the government.
And also, to your point earlier, the middle American, the median person, has had their mortgages up here, their car payments up here, their credit card payments here. They're still like this.
Yeah.
Right. The stock market goes up. A bunch of rich people get richer. And sure, their pension plans might be going up, but that doesn't make a difference to their pocketbook. And the moment they start cutting rates, allowing rates to fall, people can refinance their mortgages and the money will flow.
Yeah. I think what Trump is saying to everyone is the bet he wants to make is to move rates as close to zero as possible. And whether that's 2%, 1%, it doesn't really matter. I think the rate cuts that we did before were a normalization rate cut. So we overshot and then we moved them to a level where you can make the argument that, okay, now we're normal. The next rate cuts to me will be the actual rate cuts that we were expecting. That'll be the trigger for the business cycle. And it'll come at a time where I really do believe we are underestimating just how much build out is going to have to happen to deal with all this compute. The humanoids that are coming behind it, the full self-driving vehicles, the AI native phones, the battery needs. I mean, I've tried to explain to people in my writings with how much hardware is needed for the embodiment side. And I think you're seeing that in the semiconductors. I think semiconductors are the oil of this generation. Yeah. And they're breaking higher and they're broadening out. It's not just NVIDIA anymore. It's the analog names. And I think that's in preparation. So I would be using, and I have in the past, and I'm sure you have too, if you haven't seen this so far, the SOX relative to the NDX, it's having its best quarter in the last 25 years. And I think that's a kickoff phase, because I think for a true business cycle scenario that you're talking about, semiconductors should outperform software, and that's what's necessary, and I think that's what started.
At first, like many of us, trying to get our heads around what was happening with the amount of capex expenditure by OpenAI, Meta, and Google, and Microsoft, it was like, okay, this is going to be a capex cycle. They'll have overordered, and then we'll have the downside. And then I was in Abu Dhabi, and I realized, oh, all the state players are involved too. I'm like, there is no end to demand in semiconductors. There is no end to demand. And then Elon's like, we need 1 trillion things. And then somebody else says, we need 1 quadrillion data set. It's like, okay, this is, we've just seen Facebook saying, oh, it's going to do a debt offering for like $23 billion to build more stuff. And it's not going to stop because the technology is exponential. And I know many people watching this, rolling their eyes saying, this is like 1999 all over again. It's not.
Mm-hmm. No, this one is actually one of the simplest things I've ever seen, where you have two groups right now, the two largest groups on the planet, governments and the hyperscalers. Like it's difficult to say to people, you realize the hyperscalers are massive. In the S&P 500, they're 30%. 7 names make up 30%. But they also make up close to 60% of the earnings growth. Their revenues are growing at 10+%, while nominal GDP is 4.5%, and the S&P X, those 7, their revenues are growing at 4%. You and I grew up in a world where if nominal GDP was 5, you'd take a multiple of 1.5 of that, and that would be the revenue for the S&P 500. Well, now, X the hyperscalers, you're below nominal GDP. And the reason is because the S&P 493 are old companies. They're old businesses that are barely competing for the most part with them. This spending is a race for AGI. It's a race for ASI. They believe if they don't win, they're out of business. Mark Zuckerberg is paying $100 million for OpenAI employees, and he's now hired apparently 8 of them have signed on for that bonus. That's confirmation that they are in a race because you will face obsolescence if you don't get there. Whether or not that's true, they believe it. And then on the government side, you have the US and China believing that whoever gets this controls the world. So this can't stop. There's no way it can stop. The only thing that can stop it is the friction from power. That is it. That is the only thing I can see, is that we won't have the power infrastructure to be able to do it.
Yeah, I see it the same way. The other interesting thing I always look for signal is in stuff that Elon says. And one thing he's just planting a million flags that people don't pick up is, the world is so fossil fuel focused. That is the way. And, fossil fuel, yes, is recycled sunlight stored underground. But there's a bunch of people obsessed by the Kardashev scale, which is the type 1 civilization. Basically, we've got 1 million times more energy than we need from the sun alone. And Elon's point is 99.99% of all of our energy will come from the sun, and everything else will be a rounding error. And that solves everything, because he's obviously thinking ahead, which is like, how do we solve the problems that you said? The massive amount of energy used by the robots and the computers and the data centers and the everything else that needs to happen. And he's like, well, just look at the sky, and the biggest thermonuclear reactor in our solar system is there. We just need to use that. Does that fit into your framework?
It does. The problem is, and this is so, and I don't know if you've done this, but as you listen to Elon and you listen to Eric Schmidt, you listen to Mo Gadwat and all the people associated with Peter Diamandis, as you're doing that, almost keep a timeline of the next 25 years. Because a lot of the things they're talking about, we'll start seeing the benefits on like solar. It's going to take a lot longer. Fusion, all this, we need infrastructure, and the ability of building the infrastructure, it takes time. It's just not that simple to go. The solution and the cost will get there, and we'll come up with the problems because AGI will speed up us solving these things and finding better ways to do it. But the actual physical part, we're running into a problem with the physical part. So in the next 5 years, we know we're going to have massive advancements. Human beings are not prepared for this in any way, shape, or form. If they're scared right now of their jobs, what are they going to do when there's humanoids walking down the street? And it's not like a gimmick, but it's actually happening. When Waymos run into New York, do you really think they're not going to be set on fire? Do you really think we saw protests around Uber? So I think the problem is, for the next 25 years, this is this kind of really bad place where I think the job situation is going to be impacted because of capitalism. Capitalism is towards shareholder wealth. You're going to see bankruptcies from companies that can't compete, who are losing their business quickly. That's why rates have to go down. And on the flip side, you're going to see the bigger companies just stop hiring across sectors. It's not going to be one-off. You'll have a rise in entrepreneurs, but that kind of disconnect between the next 25 years of people figuring out how to survive, I think the solar thing is a really optimistic thing. Same thing like living forever and all of these different pieces. But I think we're in this 5 to 10 year gap where everything I see, I think it tilts more towards people adjusting than people benefiting. And that's the part that I see.
Although, I follow the Chinese solar adoption, and it's vertical.
Absolutely.
I mean, it is one of the fastest exponential trends I've seen, is that they've kind of figured out that this is the only way forward. With a command economy, you say it and therefore it is so. We haven't managed to do that yet.
No, and I mean, Elon's been posting on X over the last 24 hours about what was taken out of the big, beautiful bill. And it's not just the EV side. It is the solar, it's the wind, it's everything that goes into it, because we need clean energy. And he's basically saying, so we're going to stay with fossil fuels now because the government can't get away from what it needs to do. So I wrote a piece on Chevron and Exxon as bullish AI trades, not because they are doing anything or building nuclear or solar or wind. It's because gas-fired plants are the only option I can see in the U.S. at this point to fill in the gap for the power needs we have for the next 5 years. And that's where I think there's just this next 5 years to me worries me, except for one thing. We will spend the money. We will absolutely debase. We will do everything we need to do to compete to make sure AI is going. I just think people are going to have a hard time adjusting to what's about to happen. That's my own personal view. So,
another thing that's triggered in my mind from talking is there seems to be a change in where VC money is going now, and the battle is hardware versus software. And hardware, as you said, the next part needs a lot of hardware, and that seems to be getting the investment. Software is pretty much solved because AI will do anything soon. So in which case, what do you need software for? You don't need anything. You don't need to design an Excel spreadsheet. You don't need to design the next thing because it'll do it for you, and you don't even need a product. So it feels like the next battle is hardware, space being one of them and stuff like that.
Mm-hmm. So this gets back into the business cycle thing. One of my favorite companies to view monthly is Stripe. I think Stripe owns the ecosystem of information for the startup world now, much more so than the VC world, because they're tracking everything and they have all these companies on their platform. And just them talking, I think during the Stripe sessions, which was in May, they highlighted that Cursor had 300 million in ARR, which I now believe is 500 million in ARR. The other problem with software companies is that they're able to scale without needing capital. They're able to scale very, very quickly. And so you don't actually get the chance to invest in them, and they don't need the capital, and they don't want to give up ownership. The physical world still takes capital to build things. So hardware still needs investment. It still needs the dollars. So this gets back into the rise of software. I really do believe the software world, anything built on code is now ubiquitous, as you said. And so any company is now they're gonna have competition, and that goes for Google. That goes for all of these companies. If they don't find a way to keep their business lines alive, we've obviously seen it with Google Search. It's not that they're gonna go out of business. It's not that they're gonna go. But I think the days of their revenue, of their earnings growing rapidly, are over. I think that if it wasn't for the changes put into the big beautiful bill in allowing depreciation of their investment to be at a certain level that allows them to kind of hope in the future they get the revenues in to offset delaying this expenses. I think the hardware side is a much better place for people to be, and I think the VC world sees it as a safer investment as well.
Final question for you. Another one of your themes that I like to move along mentally from time to time is the Ozempic GLP-1 idea that you had. And where's your head with all of that now? Because that was always an interesting thesis. In fact, you wrote it up for GMI a couple of years ago as well.
I did. It's in an interesting place because of obviously Trump taking over. You have a lot of fear throughout the biotech world as to what they're going to allow and what the rules are going to be. The good side is, and I guess this isn't good for things like McDonald's and things like Coca-Cola. I think what Ozempic, in kind of my mindset, we know that there's going to be solutions to all the diseases that have gone on. We know that. We've learned more about...
There's a version now that's coming to trial, that's been trialed, which doesn't give you any muscle loss either.
Yeah. And that's the part. They're learning on what they can do for the offsets. You collect the data, it'll get better and better. And we obviously need this because of the diabetes problem that's across the planet, but it coincides. Diabetes to me is a form of aging. It's a form of us realizing aging is a disease, and we're making a lot more ground on that too. Interesting work on cellular level details, epigenomics in terms of reverse aging. I just think there's a lot happening. This was necessary, again, as a bridge to AI. So I still think the GLP-1s at this point, they'll get easier to take, obviously with pills. They'll get easier in terms of the side effects to go through it as we can do more predictive analytics and we can match up which one is a better version for particular DNA. That'll be there. But these are just bridge drugs to me. So if I had to guess, again, for the next 3 to 4 years, everything is fine. But as it is with all companies, at some point when you get past the 5-year mark, and this is a take we haven't talked about, I'm really, really negative on long duration assets. I think it is a very, very difficult world to forecast what anything is going to look like 5 years from now. And I think long duration assets have historically needed to save things based on where the value will be 5 years from now. And I just think it's very, very difficult for all of those assets to sustain any kind of bid. And I think that's hurt the alt season as well. I think the VC world having trouble, the private equity world having trouble, commercial real estate, all of these long duration assets have really had a hard time. And I think GLP-1s, they're starting to fit into the long duration asset side, but I think any kind of sell off in these things, there's still going to be tremendous demand over the next 3 to 5 years.
I think where I got to with the long duration asset, in my mental framework in my head is we have some sort of business cycle, but again, I agree with your view, which is there is no recessions again unless it's an external factor, and then only brief. And in my head is, okay, we have a cycle, whatever, down cycle in 26 and into a bit of 27, whatever. And then I think we go a full spectacular bubble because it feels like it's the last hurrah, because beyond that, none of us can see anything. None of us. I mean, I keep saying it's like 2030 is like that's it. There's a curtain and I can't see behind it. In our macro lives, we've always been able to see behind the curtain. That's been our job. And you get to this, you're like, I haven't got a fucking clue. I just don't want to be caught up in it. Just try and make as much money as possible and try and observe the world drinking pina coladas on the beach, because this is, I mean, what is investing? We've talked about this. What is investing when you've got AGI? What is being a doctor? What is being a lawyer? What is anything? And so in which case, you just want to be sipping a cocktail, watching the world and see what develops.
Yeah, it's funny. So we've had, someone said this to me on a recent call. I was talking about things and they said, so this isn't helicopter money, this is helicopter intelligence. And I went, yeah, we're dropping intelligence around the globe. And for anyone to think that their business is safe, their job is safe, anything is safe, when the cost of intelligence has just gone to whoever is using AI today has a huge advantage over people that are not. I don't know if you've found this out, because I remember when we did an interview and I remember I had said to you something about AI and you asked me a question about how much I was using it, how I was using it for papers, how it was going on. And that was not too long after ChatGPT.
No, that was early days, yeah.
You and I have really integrated this into our lives in a major way. But the majority of the people that I know in life have not. They barely use it. I can't go an hour without having done something with it. Even when I'm driving in a car, I'm having a conversation, because now the conversations, there's no breaking. You can keep going forever and ever. It can be a book, a theme. I've tried to explain to people that any topic you've ever wanted to have a conversation with, think of it as you're having a conversation with Albert Einstein and asking him questions about why he decided to do this, what went on. You can interview people the way you want. Until you use it, until you go through it, I just don't think people have an idea of how much the world is going to change. And by them not using it, they're going to be in trouble. I will say, Raoul, and this is, so I believe in creative destruction. I believe in the Joseph Schumpeter thing. But I did a video a week and a half ago, and it got a lot of people, I would say, reaching out to me saying, do you really believe that? So at some point, capitalism is cannibalized by capitalism. And that's where we are. And so as much as I even want to believe that we're going to have a boom, I just think for the transition of money from the fiat system into the crypto world, my end game was very simple. We have to get to a point where capitalism is cannibalizing capitalism. And I believe we're at that point. And I hate to say this, but I really do think we've seen this across the globe. This is not the first city, but the New York election and the demographics and the voting and the student debt and the inability of getting housing and the worrying about your jobs, these are not going away. There's no way that the 25 to 40-year-old is going to be in a position where all of a sudden all of those worries go away, because to some degree they're related to work and the identity human beings have. You go to school, you graduate with a degree, you made this huge bet on the future, and then all of a sudden it's over. And the analogy I've used is we went from having a Lego box where you just got a bunch of stuff and you had to create something, and then you started giving kids Lego boxes with instructions. Well, that is the school system, and that is what the 25 to 40-year-olds were trained on. You do the right thing, you take out debt, you get an education, you're going to get it. So I don't want it to be cynical, but I think capitalism is under attack right now from the cohort that matters the most. And then the people that have the most money don't seem to fully grasp it. And so socialism is going to have a rise, in my opinion, in the cities in the US. And I think it is going to be a very nasty kind of bull market phase, but very good for crypto. And AI will just continue the profit margin surge, which will keep stocks higher. But I don't think we're going to get into a speculative phase anytime soon.
Yeah, I still do, because of debasement and what that drives. But in the end, where I get to in all of this is, somewhere down the line, the marginal cost of electricity will go to zero. Mm-hmm. And therefore, you have infinite abundance of intelligence plus humanoids. And so what is money at that point?
Well, now you're getting into the point. If I told you, and I'm not predicting this, although in the back of my mind, I've decided, I don't know if you've ever done this, I've decided not to predict publicly where I think Bitcoin's going to go. But I do think the second half of this year will be a explosive up move. And I say explosive because I believe the most important thing that happened in the first half of the year was what Sundar Pichai said on the Lex Fridman podcast and also at the Google I.O. developer. When he said that from a year ago, we were up 50 times in token usage. Okay. Now, if you ask 100 people on Wall Street, what's a token with inside AI, 99 of them won't know what it is unless you go specifically to the tech world. When I hear tokens, I think AI adoption, I think inference, I think reasoning, I think AI agents are just starting. AI agents to me are the most powerful force for productivity and job losses in terms of the going through. But it is massively powerful for Stripe. They should see exponential growth in stablecoin transactions. And you're seeing this, like the stablecoin adoption is happening at the same time. I just don't think people yet know on the wealthy side know how to translate tokens to stablecoins, to Bitcoin, to Ethereum, to the power needed to fund all of that. But I think that's what we're going to learn. And I think that is an anti-fiat situation. I think it's fine. They'll go up together. But if Bitcoin were to go to, say, 500,000 by the end of this year, not predicting, I'm just saying if it did, because of a short squeeze, which I think is going to happen at some point from all the people realizing that it is a finite asset and there are people that need to borrow on it because they got in trouble from 21, 22 and they're borrowing future production and blah, blah, blah. I've now gone through this. If we get a spike, well, that'll put it at $10 trillion in terms of Bitcoin. You'll have the entire ecosystem go up. I don't think the fiat system will see that type of growth in terms of this. And once that's moving at that speed, I think everyone from the investor world is going to start looking at how to participate at a time that wallets are easier to open and we're starting to see more and more. So I just have this belief that instead of this being a boom, I view this as a disruptive shift in money that has to happen at a time, not when the fiat system's doing well, but when the crypto thing is doing so well and it's not based on speculation, it's based on the transfer of money.
Yeah, and I've always said it was a parallel financial system that got built and we're now migrating across. And what we're about to do is migrate the cash system onto stablecoins. I mean, it's staggering, but it's coming. And when you've got the government talking about deficit financing, and everyone kind of knows that it's debasement, it'll only accelerate the adoption curve because it is the only way out. It's this capitalism eating capitalism. Well, here's the newest form, and it's going to happen, and nothing will stop it.
That's why I think we are. I think all the turning points right now are that capitalism is eating capitalism, and rather than it be a bearish argument for assets, it's not. But I think the pie of assets, the shift should be happening to a different system. And I think that's a very different argument, and I think it'll bring wealthy people in, because then FOMO will set in, greed will fit in, and it'll be more towards the crypto world. And that's why I think Circle's important. I think CoreWeave's IPO is important. I think Core Scientific. You're seeing it in the traditional finance side. And when I hear people say, well, I think Bitcoin's not going up because people are moving into Circle, and I'm like, I don't know what you guys are talking about, but that's not the way it works. I just think the Ethereum side and the power side, the whole energy, all of the transactions, I thought the token side is big.
Interconnectedness of everything. That's what people don't yet see. And what you're talking about is it's all part of the same thing. It's this new digital world that we're moving into that is entirely new. And it has its own system of money. It has its own system of truth. It has its own ledger system. It has its own everything. And it has its own intelligence. And it has its own physicality. I mean, that's what we're moving into. It's a whole new world.
Yep. And transactions and volumes are going to spike. And AI was the bridge to this. And this is why when I decided not to stay in the hedge fund world, it was, let me try to talk about the traditional finance world through AI bridging to the new digital world. And it's an accelerant in this whole thing. And the AI agents is the most important thing because it gets to inference and reasoning, which then feeds into humanoids and everything else. You can't have humanoids, you can't have full self-driving, true full self-driving, you can't have all the other things without first getting digital employees, which is where the agent world is, and they need to transact with each other. And that's the phase that we know we're accelerating at right now. So
because right now energy isn't free and you have to pay the agent for the energy use. You know, it all comes round. It all fits together perfectly. As ever, Geordie, fabulous conversation. And I look forward to catching up the next time we do this as well, because things are moving so fast. We both talked about exponentials, but for all of us, this is happening at such a speed that you can barely keep up. Because I think when we were talking in the beginning, we're like, well, imagine when you can put graphs in and it can read a graph. That happened in like 6 months after it's like, holy shit, and then, it's got perfect voice, and next it'll be video and you'll be speaking to me. This is all coming at such a speed that's hard to get our heads around, but what a time to be alive.
It's a great time to be alive. And just for people that want to do something for their kids, just get them to use it. And I think Raoul's point is the same one I did, which is the voice. But with inside the voice, I also said one more thing. If you haven't built an app in Cursor, the paper I'm writing right now is based on Peter Diamandis' X Prize that he created a long time ago, which was meant for people to create and finish a project and to give them $1 million. Well, I think with your kids, if they go build something in Cursor, which they can just do with natural language, I think it will not only give them pride and joy, it will also set them up for using AI more and more, not just to use it as a chatbot, but to actually use it to build things. And I think that's the most important thing for the kids out there.
Amazing. All right, Geordie, good to see you. See you next time.
You as well, Raoul. Thanks.
As ever, a brilliant conversation with Geordie. I love the way that we just kind of shoot the shit with each other and catch up on each other's views, stress test our ideas. Look, when you're talking about the future of technology, how it impacts society, how it impacts economics, that's not something that anybody actually knows the answer to. So open conversations and free-flowing ideas are what make everything. This is how we build a framework. And it's important for you all guys to build that framework too. And hopefully this was useful for all of you. See you next time.
Hey, Real Vision viewers, a quick pause to introduce you to today's sponsor, Axelar. Axelar is building the rails for the next wave of global finance, not just crypto, but the future of how assets move, how markets connect, and how institutions plug into open systems. Think of it this way. Bitcoin brought digital gold, Ethereum brought smart contracts, but Axelar is bringing connectivity, the secure link between your favorite blockchain and traditional financial institutions, rushing to plug in. It's why top-tier firms like Dragonfly, Polychain, Coinbase Ventures, and Binance Labs are backing Axelar, and why global giants like Deutsche Bank, MasterCard, Apollo Global, and JP Morgan are already building on it. If you believe the future of finance is open, programmable, and interoperable, Axelar is the gateway. Want to digest deeper? Visit realvision.com/Axelar or follow on X at Axelar. That's AXELAR, the gateway to open finance. Today's video is sponsored by VeChain, the leading layer 1 built for real-world adoption. VeChain launched all the way back in 2015, built for real-world utility before most people had even heard of blockchain. One of the oldest protocols and boasting 100% uptime since launch, it's known for powering real-world solutions and partnerships with global brands like the UFC. Now, they're entering a new, user-focused chapter powered by adoption in the VBetter ecosystem and an ambitious technical roadmap dubbed the VeChain Renaissance. Renaissance builds on VeChain's history of real utility and adoption to deliver a faster, more flexible core protocol, designed to meet the needs of builders and drive mass adoption. The next phase kicks off on July 1st with the launch of Stargate, VeChain's new staking program. It's an evolution that brings VeChain closer to delivering its vision of a world powered by Web3 without compromising on reliability or stability. The future is here, and it's scalable, sustainable, and evolving with purpose. Check the links in the description to find out all you need to know about VeChain Renaissance and the updated staking opportunities available through Stargate.
Hey, thanks for sticking around to the end. Look, if you enjoyed it, hit the subscribe button and check out the video here on the right-hand side. I'm sure you'll enjoy that one as well. And if you're ready for more, go to realvision.com/join. I'll see you there.